Is the oil run finally done? Hi, I'm Scott Greer with Forex Signals, and you're going to be seeing a lot more of me and my fellow analysts each week as we bring you amazing content here on our YouTube channel. So if you haven't already, go ahead and smash that subscribe button because today we're talking oil. Is the oil run finally done? Is oil topped out, or are we going to go higher? Well, today we're going to answer that question. You're not going to want to miss this video. All right, let's go ahead and jump to the charts here so we can try to make some sense of this price action of where oil has been, and of course, most importantly, where we're going from here. So let's go ahead and take a look at a kind of a longer term perspective of where we kind of got started here. And if you guys remember back during the pandemic, after COVID hit, there's all these lockdowns and nobody was traveling, nobody was driving, nobody was flying. You can see oil went actually all the way down here. So it's kind of where we started. At one point, we were negative $13 on oil. And that's never happened before, where they're literally paying people to actually buy oil, to store oil at one point, because we were at a negative price on the oil futures. Now, of course, that did not last long. As you can see, we went way up from there, and this really started this huge run up in oil where we find ourselves right now at about $111 a barrel. So one thing that we like to do, and we do this in the trading room as we're kind of going through the analysis of these markets, and whether you're a shorter term trader or a longer term trader, or even maybe you're an investor, it's really important to understand from a broad perspective kind of where the big footprints of big money are selling or buying into the market. And so if you look here on a monthly chart, and this monthly chart gives us a longer term perspective, if I go all the way back here to the 2008 high, I notice that I see something very interesting here. I see this little top here, right, where price got up to about $140, and then all of a sudden it just dropped like a rock. You had a huge amount of selling all the way up here from about almost $150, I should say, all the way down here to $35. That was a massive drop over about a 6-month period. Now, who has the account size to be able to create a move like that? Well, this is really, to me, this is indicative of big money selling. So this is where the big hedge funds or the investment banks were selling oil and created a huge footprint of what I call institutional supply. And it's really amazing when price will come back and revisit these areas, sometimes years or even decades later. A lot of times the institutions will actually start selling in those same areas. And so as a trader, it's important to me to make sure I mark these areas down for really 2 reasons. One, if I'm in a longer term long position, I want to know where I want to sell before the institution starts selling. Then of course on the flip side, if I'm looking to short the market, I want to make sure that I start shorting right before the institution starts shorting so I can be along for the ride as they push prices higher. So right now from a longer term perspective at about 111, I think that we definitely have room to run in this market. And so if we go to a smaller time frame, this is a weekly chart, so we can take a look at some of the weekly candles. We can see that that the uptrend, the trend line is still definitely intact, where we have 1, 2, 3, 4, 5, 6 touches now of this trend line. In prices here a couple of weeks ago, we did have a big move down as price came up here and it hit this 130 area. You can see this little wick here. We came up to 130, we came down, and then that was retested here several months later. We had this big drop from this 123 all the way down to this 102. And it did go below the trend line, you can see right here, but it didn't close, and that's always key. So when I draw these trend lines on larger time frames, such as a weekly chart, if the trend line does break, that is not necessarily an indication that the trend is over, okay? Because a lot of times it'll go below there, but then it doesn't get a close, and that's really what was significant. Last week we didn't get a close, and so price came down. We saw some buying pressure as it hit that 102 area, and then now this week we're seeing some bullish pressure as we broke the high of last week, okay? So right now I think that we are probably on the verge of another move up in oil. And some different fundamental factors too to kind of consider is that as we go into July, and here in the United States we have Independence Day, the 4th of July is typically kind of the start of the summer travel season. So there is going to be an increased demand for gasoline as people get in their cars and start driving on their summer trips, as well as lots of air travel. So the demand for oil in the summertime is going to be greater. I think that's going to give you some headwinds for oil to the upside. Another interesting thing here, if we take a look at this recent article, U.S. oil inventories fall as refiners push towards limits. So this just came out as of today. It says U.S. crude oil inventories fell more than expected last week as already strong refinery activity ramped up even more. So this is according to the data released Wednesday by the Energy Information Administration. Okay, so oil inventories starting to fall, so that might give you a little bit of a push down as the surplus starts to go a little bit lower. But again, coming to that peak demand, I think that's going to give us a little more push to the upside, and also that is supported by the technicals. So let's go to the daily chart here. Okay, so the daily chart kind of gives us our perspective over the last few months. Okay, and you can see this is that 125 area where last time we fell. And did have an oil position here a couple of months ago as we were pushing higher, and this was kind of the area that I figured that the sellers were going to come in and that we're probably going to get a push down, and that's exactly what happened. Didn't quite get to that 125 area. It got up here to around that 124. We had that big push down, but now we're coming to that footprint. We're bouncing off that footprint of big money again. This is the origin of a real strong move. This was the May low. And price came down to that 102 area, and now we're starting to see that push to the upside. So I think right now, from a shorter term perspective, this is a trader's market. If you are going to get long oil, I would look to just ride this up to this 125 area, because I think that we're certainly could get another push down to that side, and we may start consolidating a little bit. Okay, but again, I think from here we're going to go probably a little bit higher. We do have peak demand coming into the summer travel season. But if you are a long-term investor, I think ultimately we're going to go higher in oil, and this is probably where we're going to start to see some sellers come in around that 140 area. As you can see, that was the 2008. This is the institutional supply, where I would expect the institutions to start taking profit on their long-term positions in oil, as well as potentially starting some sell-offs. Well, if you enjoyed this video, go ahead and hit the like button, and feel free to drop some comments in the chat. And don't forget to subscribe to all our social media sites. I'm Scott Greer with Forex Signals, and I'll see you in the next video.